Welcome back to the Dividend Diplomats YouTube channel. You guys, you got your boys, the B and the LLB over here talking to you guys about a dividend high growth stock in the investment industry. And no, we're not talking about T. Rowe Price that barely increased their dividend. No, we're not talking about BlackRock, who's also been chilling on the sidelines. We're talking about a stock that doesn't really get too much attention in the investing space. But here we're dividend investors, and we're turning over every rock to help you guys find stocks to either buy right now or add to your stock watch list.
You are 100% right, Mr. Lanny. So before we jump in and we talk about this stock, subscribe to our channel. Give this video about as big old-fashioned a thumb up as you possibly can. Help us reach what? 20,000 subscribers, Lanny. We said we want to try to get to 20,000 by March 31st was the goal. So let's crush it way before then, everybody. Come on.
We've got about 7 to 8 weeks left right now. We're at 15,000, over 15.7 right now, almost 15.8. Long way to go, but I know we can get there. So let's make it happen. So for stock market's been kind of interesting, especially as the Fed, recently raised their rates by 25 basis points. It's been a little volatile within the investing space in particular. But year to date, the S&P 500 is up 9%, up about almost 340 points on the year, over 4164 right now, as of the close on February 7th. So as the stock market's rising, that always brings in a little bit of a wrinkle when it comes to dividend investing, because we want stocks on sale. But stocks are always on sale. And that's what that's what we're doing here. We're trying to see if this certain stock is on sale and if they deserve a spot in your stock watch list.
That's right. And yeah, I mean, to everyone's point, it just takes a little bit more digging, but there are always undervalued dividend stocks to buy despite the strong market gains. I just want to make sure to emphasize exactly what Lanny's saying, because it could not be true. We are always buying. We are always looking at the metrics. So that's what we're going to do today. I think it's time, Lanny. Is it time for the big reveal? What company are we going to do? What is it from Christmas Vacation? Joy to the world.
So guys, we hinted at it at our dividend increase video. Check the link above if you haven't watched the 6 big dividend increases from the week of January 30th. We're going to dive into Chicago Mercantile Exchange, or the CME Group. Ticker symbol is one of Bert's favorites, CME. Keeping it damn simple on this channel right now, guys.
I freaking love it. I love when that happens, everybody. And
exactly.
We talked about them because they just in that increase video. So what's the quick background here on CME? And what do they do? You're one of the oldest exchanges out there. You can buy what? You can buy all kinds of commodity. You can buy futures. You can now buy crypto. There's a lot of stuff that CME is doing to make themselves relevant in 2023 and beyond. And it's actually a great idea. I mean, if you think about the business, so you got to trade these items somewhere, right? So why not have it in one of the largest, oldest exchanges out there?
One of the oldest exchanges. You can buy your crops. You could buy your metals, I believe. You could buy a bunch of, derivative contracts marketplace, essentially. You could buy, future prices on anything, you name it, on there. And even cryptocurrency futures, as Bert was saying. So as trading is riding on the exchange here, CME is getting a little piece of every single trade that is being made, which means it's just a revenue machine. It's literally Jerome Powell on steroids. They are essentially printing money because trading hasn't slowed down, even in a rising or downward stock market. They'll make something on the buy and they'll make something on the sell. They'll make something on the option, the puts, the calls, you name it. They're making money.
And honestly, think about it. What are really the big expenses? I'm sure we can think of it there, but think about it. People paying brokers and everything to bring these customers into them. Yeah. Storage, probably AWS or someone that's just storing all this data. Security. That's really it. Insurance, there's not a ton of there's no cost of goods sold. That it's very streamlined here for marketplace. So it's actually great. And what you said, Insane margins, Lanny. It's nothing to sniff about. In the last earnings of a 56% profit margin. I mean, it's
Yeah,
absolutely wild.
massive profit margin. So yeah, as Bert was just indicating in their performance, right now only Q3 of 22 earnings were out. Guys, they made 1.2 billion in revenue. And of that, 680 million of the 1.2 billion was net income.
It's insane.
56% profit margin.
Absolutely insane. We'll take that all day and twice on Sunday. I mean, what's in there too? Double-digit revenue growth. Like, it's insane. And on top of that, what do we love more than anything else? We love looking at balance sheets and seeing a very liquid company, 2.2 billion of cash on hand. Fantastic. Current ratio is 1x2. So that, I mean, they can cover all their current liabilities, everything that's due within 12 months with their current assets of, it's fantastic. It's exactly what we like to see when we're evaluating the balance sheet for our company. And it also, I mean, what we love to see on an income statement, 56% profit margin, freaking awesome.
Yeah, what's cool is even if net income didn't grow that significantly year over year, they still had top line 12.27% growth in their biggest revenue engine, which is, the clearing of transactions and those transaction fees. So their bread and butter continues to grow. It's not like IBM or Intel or Bed Bath & Beyond, where their legacy revenue engine slows or declines. CME's revenue engine continues to grow. And this is a great stock right now that we really wanted to evaluate. And guys, you know how we evaluate these stocks. Bert, there's 3 certain metrics that the diplomats run through each and every dividend growth stock. What are those 3 easy, simple metrics?
You got it, Jack. Got the price to earnings ratio less than the S&P 500. Payout ratio less than 60%, although that perfect payout ratio is between 40% and 60%. 3, you got that dividend growth history, where we look at the 5-year average dividend growth rate and how long has a company increased that dividend. After we get through the first 3, come on, everybody, we check out that bonus metric. It. We look at that dividend yield. That's the last thing we look at. That doesn't drive our decision, but you bet that we are going to consider yield at least somewhat in our decision.
Now you listen up, Jabroni. Ticker symbol is, again, CME. They were traded at $177.80. We're going to get through the metrics here. That price to earnings ratio. So the analysts right now are still expecting $8.28 in earnings per share. So you take that $177.80 divided by 828, you're going to get a price to earnings ratio of 21.47. So a little bit on the high side, right, B?
Just a little bit, few bips above. Kidding. Yeah, just, it's not bad though. It's not outrageously overvalued compared to the market. I'd say it's pretty much in line
with the market. Yeah, because I think the market is around 22 right now, the S&P 500. So with the market going up about 8, 9, 10% this year, the PE ratio on the S&P 500 is obviously a little high.
Yeah, that's right. I didn't check that before the video. I should have. I was still anchoring it to like that 20 PE ratio of what I was expecting. What was 2 weeks ago is what, but all right, let's move to metric 2 here. Payout ratio. Their annual dividend is $4.40. Their payout ratio is 53.14x. Beautiful. Perfect. Right smack dab in the middle.
Guys, with the perfect payout ratio from CME stock, Mr. Perfect would be very proud.
Yeah, but let's talk dividend growth, Lanny, because there's a lot to unpack here with CME. So their 5-year average dividend growth rate is 9.49%. They've increased that dividend for 12 plus years. They are halfway to becoming a dividend aristocrat. And for all those new subscribers and those new viewers that are new to dividend investing, a dividend aristocrat is a company that has increased its dividend for 25 consecutive years or more. And then once they hit 50, they become a dividend king. So Lanny, why don't you tell us, when was the last time CME announced a dividend increase?
Again, it was that last video. Again, they made it number 12, 12th straight year. They went from $1 to $1.10, 10%, which guess what? That falls in line with their 5-year historical average, which is about 9.49%. So they got an almost 10% average dividend growth rate. But here's the real fun part. And we'll talk about the last 5 years. But the last 5 years, at least, and going, they've always paid a little special dividend. And Bert, gracefully did what the yield would look like with the special dividend. For instance, in 2023, they paid a one-time $4.50. Guys, their annual dividend is $4.40. So right there alone, you're at $8.90 in payouts, from CME Group. So they are just delivering it all back to the shareholders, literally, like all of it.
It's absolutely insane. And the cool thing with the special dividends is when you put the chart like you have here, Lanny, of the last 5 special dividends, they're growing that special dividend too. It grew from, in 2019, it was $1.75 per share. Now it was $4.50. And each year, except for one, it's grown substantially. So not only are they growing their regular dividend, they're also growing that special dividend, which is freaking awesome. But the reality is, Lanny, should we really be surprised? Go back to that earnings release that we just talked about. 12% growth in clearing fees. They had strong revenue growth, strong net income, strong profit margins. So of course they have the ability to pay back a lot of that margin to the shareholders. It's freaking fantastic.
It's fantastic, Bert. So guys, looking at that dividend yield right now, it's at 2.47%. When you throw in the special dividend, they're actually yielding over 5% right now. And historically, they've yielded anywhere between 3.5 to 6% with that special dividend. So the special dividend is really a beautiful cherry on top. Obviously, no dividend is guaranteed, let alone a special dividend. But based on historical patterns, I don't see them slowing this down. But being conservative, we do not include that in our dividend metrics. But if they continue to do it, then that's great.
Yeah, it's a strong yield without it. It's an even better yield with it. So let's summarize here. P/E ratio, 21.47. Payout ratio, 53%. 5-year dividend growth rate, 9.49%. They just announced that 10% increase last week. They've increased it now for 12 plus years, and they have a dividend yield without a special dividend of 2.47%. And you double that up when you add in the special dividend on top.
So guys, this stock down, about 26, 27% in the last, 52 weeks, up a little bit year to date. They're about 63 billion by market cap. The question is, Bert, what do you think of its stock?
It's interesting. I mean, it's not one that I really thought that much about it. We joked around about how it was just it's a quiet, great stock. I mean, we sometimes get caught up in trying to find the best value, but it's not always about the best value. It's about quality dividend growth, quality stocks that are trading at a valuation that's favorable to us. And this may never hit a 10 PE ratio, a 12 PE ratio like some of them. But if you're looking for just a quality stock that's proven it can pass the test of time, CME is one that could have a great long-term spot in your portfolio.
Guys, I mean, Bert, I can't agree more. They're definitely on my stock watch list. I'm going to look at positions to see if I could trim and maybe start a position in CME Group. Obviously, you guys should definitely do your own research. This is not professional advice. But what do you guys think of CME stock? Or do you think this is a stock to buy? And if for some reason you already own CME stock, let us know in the comments, just because we haven't seen or heard from many of you.
Yeah. If you haven't already, everybody, you better subscribe to this channel. Give this video big old thumbs up. Remember, we're trying to hit 20,000 subscribers before the end of March. So help us get there by spreading the love of dividend growth investing.
Guys, we appreciate it. We appreciate the support and rocking with us. Because always remember, you're either with us or you're against us. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.